listening to Pre-Market Prep. I'm Brianna Valesky here with Serge Berger. He's the head trader and investment strategist at the Steady Trader. Serge has been an active trader since 1998. During his career, he's been a financial analyst, dealt in fixed income instruments at JP Morgan, and was a proprietary trader in equities, equity options, and futures. Serge, thanks for joining us. It's always a pleasure to have you on Monday mornings.
Good morning, Brandon. Good to be on.
So let's get your overall take on the market right now. You sent over a chart of the SPX monthly, and I have it up on the screen for our traders. Can you explain it a little bit?
Yeah, sure. I think particularly when things finally get more interesting as they I think are for U.S. equities for the first time this year, we need to understand where we are in multiple time frames. So the monthly chart that I sent you is a reminder that we did have a bearish outside month, which is sort of an engulfing candle. If you look at that, it's sort of the body fully engulfs the May body, the thick of the candle in June. So that typically tends to be a bearish sign. Now that's not a sign to freak out and sell everything or go short, but it's definitely something we need to keep in mind in the bigger lens. If you then sort of zoom in into the more narrow time frames, you find a whole lot of other things that are also lining up bearish here through at least a multi-month, maybe another month and a half, 2 months sort of lens. And so I like to use multi-time frame analysis for just to gain better perspective. That's the main point.
Okay, so let's take a look at some of the other charts you sent over to me. XLF, what are you seeing in this one as I pull it up for our investors?
Yeah, what I think is interesting is, and I'm not a big 50 and 200 day moving average sort of technical analysis 101 guy, but I will say that I think those moving averages tend to come in and give us pretty decent sort of areas to take notice at. And if you note the XLF, the financials actually bounced off the 200-day last week, and whether that was the low, I don't know. The point is, if that were to give, I think then we see better downside, and we're seeing that in other areas. Like I think I sent you the technology sector as well, like the XLK.
Yep, let me pull it up right now for our traders.
hmm
What are you seeing in this chart?
Yeah, so it's the same analysis again.
Mm-hmm.
I want to make clear that I'm not just looking at 200-day moving averages and calling trades. That's not the point at all. But it is interesting to see when you see a whole bunch of sectors start acting interesting around that moving average, particularly as it also pertains to the S&P 500 itself. But you see, for example, the XLK is finding resistance here. We'll see how it acts this morning. It might jump above it this morning, but it's interesting to see that we broke below it last week, managed to hold below it on the weekly closing basis. So we need to see how today acts, basically. But it could be that we find resistance here. That's one potential scenario.
Yeah, I'm glad you brought both of those up actually, because I was going to touch on some of those individual issues in those sectors that we're going to see earnings from later this week. But before we jump right into that, we can't not talk about what's going on in Greece right now. They've reached a tentative agreement that means more austerity measures for the country, but they don't have to exit the Eurozone right now. But the agreement still needs to go through Parliament. I mean, what's your take on this whole situation? Is this the beginning of the end? Like, are we finally going to see a resolution?
Um, I don't know. I honestly don't think anyone knows. What I do know is, and I've said this a couple times, even on this show. I think that there is a lot riding on the Germans to keep Greece in the EU. It doesn't seem like it from the way they negotiated. In other words, not giving them any wiggle room. But I do think there's a lot riding on them to make this happen. So, I'm sort of in the camp that we have to really take this one week at a time. I don't think we're out of the woods. But we have seen the Greek now basically, sort of defy game theory or define game theory in a new way,
Right.
which is to say that, ask for more and take less. And I think that's interesting because it shows that, the Germans do have a lot of say and the Greek don't. They finally realize they don't. So
Mm-hmm.
it's an interesting dynamic, and I don't know. I actually think they don't really leave the EU eventually, or the euro, but it's going to remain rocky. I think that's my base case. Interestingly, and I think sort of right, getting back to the trading stuff. If you look at the German DAX this morning, wiggling around 11 and a half, 11,450 or so, right at that downtrend resistance from the April top. Same thing in the Euro stocks. So we're at a pretty key inflection point here, also from a technical perspective, on the back of this. So I think today's session, maybe and possibly tomorrow, here in global markets could be quite interesting from that perspective. It's sort of make or break as far as I'm concerned through at least a multi-week lens.
Yeah, I think you make a great point that Germany does rely on this working really well. I mean, Angela Merkel has come out and said if the European Union, if the euro fails, then Europe fails. So they do have a lot riding on this. But I want to take a quick look closer to home. Bonds. We did get a Fed statement last week, but it seemed kind of just like underwhelming compared to all the stuff that we've been following in Greece and what's going on with the Chinese stock market. Do you look into bonds at all, trading the TLT or anything like that?
Yeah, a lot. It's bonds is where I cut my teeth at JP Morgan. It's sort of, you start in this business either as a bond guy or equities guy, and maybe some foreign FX or other stuff, but that's sort of usually how it's split. And yeah, I think what's more important to me is the Congress testimony Wednesday and Thursday this week by Janet Yellen. I haven't heard a lot of people talk about that, either because people have forgotten about it amidst
Right,
all the Greek mess,
right.
or they just don't care anymore. I don't know, but I think that's interesting. What I will say is I talk to a lot of fixed income desks. Again, that's my background, and I think fixed income continues to give us better signals than many other asset classes for as far as equities go. And if you look at the 10-year, 2.45-ish% or so, more or less. I still think we could see a push towards 2.6, maybe 2.7 before we fail again. That's sort of my near term read, and I think we're seeing more and more talk and realization on the street that it's not going to be one of those deals where the Fed is going to raise rates 50 basis points a clip, for the next years. Like every meeting. I think it's going to be like a sort of maybe potentially one and done, and maybe we see 2.5, 2.6 in a 10-year, and then we reverse lower. So that's kind of where I stand.
So we're officially in the heart of earnings season, and I'm not sure what's going to be on your radar, but something that's popping up, of course, we're going to get all the big banks this week, and Chris, you mentioned, cutting your teeth, and you were at J.P. Morgan. Are you watching J.P. Morgan at all, and are you interested in what the earnings are going to hold?
hmm I am. I have said very publicly, and it's probably been the most the loudest call I've made in probably my career since I've been able to say this stuff out loud. When you work at the big banks, you can't really say much.
Right.
But I do think the banks are going to be a good story for the next for the back half of this year and possibly into the first half of 2016. I think the financials, particularly large banks, they're still lagging in performance big time versus the broader market. Off the 2009 lows, in relative terms, I think the term structure is only going to help. The development there's are going to help these banks. There's actually a positive note at Goldman Sachs as well on Bank of America. I think it was last week. So, there's plenty of stuff writing. And the technicals, by the way, if the charts, then it's just hard to ignore that stuff. I think they look really, really good. So, I'm a big fan of Bank of America here as a sort of as a structural position to like into it once earnings come out.
Yeah, absolutely. One other thing, or other earnings that I'm looking forward to this week, are we're gonna start to get some of tech earnings. I'm not sure if you follow Netflix at all, but this has kind of been a monster, and I think a lot of investors will be turning their attention toward Netflix when they release their report on Wednesday. What's your take on it?
Yeah, I mean, you say kind of a monster. That's probably the understatement of the week already. It's
Right.
only 9:30. But yeah, I think Netflix is something that people have continued to haven't been able to respect, and in terms of its natural trend. And it seems to me that now that Icon is out of this position, I'm actually a little bit surprised we've seen the strength that we saw again last week, particularly on Friday. We saw another. Actually, no, that's this morning with the pop, isn't it? No, that was Friday. We had a little pop in Netflix. I was a little bit surprised to see that, and so I guess its earnings is what we have to wait for. But I think Netflix at some point is due for a much better correction to sort of reset the chart. That's about all I'm going to say at this point. So I wouldn't, from a pure, overbought perspective, I think 550, 560 would be a nice spot to see the stock retrace to before better odds again sort of come in on the long side, because right now all you can do from a trading perspective is trail the stock higher, and that's always a little bit risky at sort of at these sort of steep slopes where the stock's at right now.
What about eBay? We're going to get their report on Thursday,
Mhm.
and we're also going to get the PayPal spinoff this week. Do you follow eBay at all, and what are you kind of looking at it?
Yeah, no, certainly. eBay, I follow it. The problem has been for me as as more of an active investor, not a day trader per se. I found it a very, very difficult stock to play. I think it's interesting to see what they'll have to say in the bigger sense, just kind of to get maybe a little bit of insight into just general e-commerce, right? Because they're a massive player.
Right.
But I have a really hard time trading this thing, so I don't really want to talk about charts here. But I think it's an interesting one, obviously with the PayPal, the interesting dynamics there. So I would definitely read into their outlook, see what the trends are. That's I do a lot of reading into outlooks of these kind of companies. I think that should be something that active investors do routinely.
Absolutely, making sure that you're actually following what the company is looking forward to in the future. A couple minutes left with you, but I do want to squeeze in a few more issues. How about Apple? I mean, it's always like most people are always just saying it's definitely a long-term play. It had some interesting trading action last week, and then it got upgraded this morning. What are you seeing in Apple?
hmm Yeah. So Apple. I will continue to say the same thing. I think Apple, to me, the next big catalyst, unfortunately, is earnings. I think it's the 21st or something it comes out,
I
they
think,
come out with earnings.
yeah,
Or
yeah,
20
not this week, but I think it's next
next
week.
week, yeah, yeah. Okay, so that's that. So the problem is, and I said this when they had their developers conference, what is that, a month and a half, 2 months ago, something like
Yeah,
that.
just about.
I said that the stock, unless it makes a move, then it's going to be hard and a bit of a crapshoot to trade it um, until earnings. And of course, last week it bumped right into the 200-day moving average, which also matched up with horizontal resistance. And that trade was good for about a day and a half, and then it bounced hard. And this morning it's up another 1.15%. So, it continues to be a stock that I think you buy on dips, but at this point you wait on earnings. Unless if you day trade it, that's a different story, right? That's not my time frame here at this
Right.
point. But I agree. I mean, listen, it's hard to say Apple's, is not something you should buy on dips just from a big picture perspective. But you do need to get the right levels because it's year to date been a chop fest, like the broader market for the most part. Or at least I'm going to say it's been choppy at least since say mid to late February is really kind of what I'm referring to.
Sheldon McIntyre in the chat is asking about AIG, one of our healthcare insurers. Are you following this at all? And if so, what's your take on it?
I do think you have to follow the insurers at this point, particularly the big ones. Like an AIG, I'm more or less in the same boat here as I am with the financials in general. AIG is a bit of a different animal with its bailout program and stuff like that. But at the end of the day, even AIG, I think you want to be more of a buyer than a seller. I see earnings are coming out here in early August, I think is what it is. So I'd probably give it a little bit of time there. If you're looking at it from a trading perspective, really near term, see if today the stock can hold in there, and then maybe see if you can get it pushed towards 64 or something like that. But keep in mind, a lot of these big banks that are coming out, they also have insurance tied products and businesses in them. So if we get something out of these banks that doesn't smell right for the insurance sector, then AIG is not going to be the one you want to be stuck in either if the news hits. So, I'm very as you can tell, I'm very risk averse when it comes into earnings season, particularly this one here, because I think we have a
Right.
really important earnings season ahead of us that'll either confirm or most likely will confirm to some extent what we've seen in economic data, which has been slowing over the past 8, 9, 10 months.
So are you kind of wary entering into this earnings season that we might be seeing less than spectacular reports out of some of these companies?
Yeah, I am. The thing, of course, is we've seen a lot of, expectations been lowered. So after the first quarter and the dollar headwinds and all that, and the oil price and all that stuff, that's kind of, you know, t made analysts be more cautious as it should have been. So the question is, you know, it's almost like a chicken and the egg. So what's it going to be? Are companies going to be able to beat these lowered expectations? And if so, is it going to be enough to sort of get people to forget that it's still worse than it was year over year? You know,
Yeah.
I think that's where we're at. And then, so from my perspective, unless something just totally changes here over the next few days, I think we're going to remain volatile in the broader markets over the next weeks. That could include a massive rally and then another big sell-off into deeper August, September. But I think we need to have more volatility before we can really get a really good buying point in equities into year end. And I think earnings season here could play a factor and maybe add a little bit of fuel to the volatility fire. That's sort of I'm not betting on it, but that's what I want to wait and watch for. Is sort of that's where I sort of am right now.
Well, we'll all be watching some of these reports coming off as we enter the heart of earnings season. Serge Berger, he's the head trader and investment strategist at the Steady Trader. Always comes in with some good macro, micro, US, anything we throw at him, he kind of can give us a little bit on. Serge, thanks so much for joining us this morning. We can't wait to have you back next week.
Thanks, Brian. Have a great week.
Thanks, you do the same.